top three things in my notebook this morning. Number one, commodities as a commodity complex. Number two, copper. And number three, the U.S. 10-year bond yield. So first on commodities, something not so funny happened on the way to the forum yesterday when GDP surprised on the downside, and that's that the dollar went down and commodities went up. Commodities go down hard when the dollar, or commodities go down hard when the dollar goes up, and vice versa when the dollar goes down. So again, this is a long-standing relationship that has been firmly intact since Ben Bernanke and Janet Yellen took over the Central Planning Committee. And again, commodities hit a fresh year-to-date high yesterday. The CRB index up to 313, which puts it up 12% for the year-to-date. Now, copper, which has been a laggard, it is now developing what we call at Hedgeye a bearish to bullish trend reversal. So this is an intermediate term phase transition, and again, this would only hold true if you can keep copper above the trend line, which is at $3.10 per pound. So again, even copper, which is the world's most hated commodity from a hedge fund perspective, everybody in the world thinks that there's too much supply, which there probably is, but that doesn't seem to matter in the face of prices, because what do commodities trade on? They trade on last price. 10-year bond yield at the same time continues to reflect miserably on what has been a miserable year for U.S. GDP growth. Please do not confuse GDP growth with the U.S. stock market. These are two very different things. One is a yield-chasing instrument, of course, sponsored by the Federal Reserve Committee, and the other, of course, is reflecting on the U.S. economy, which showed a down 3% Q1 GDP number, and it could have been down 5% if they used the right inflation number within the deflator. So again, 10-year bond yield down 5 basis points on the week, down, 53 basis points from a year-to-date perspective, which puts bond yields down 16% for the year-to-date, with the entire construct of the old wall looking for rates to rise. So those are your top three things.